Hey traders, Jason here from Leavitt Brothers. Happy Monday, happy late Thanksgiving. Hope you had a good week and a good slight break. I was out of town last week, so I didn't do a video, but now seems like a good time to get caught up on the current state of things. Before I get started, quick reminder, my mini masterclass in trading is available at teachable.com. You can access it at the link below. The feedback I've gotten as of now has been very encouraging. If you're a beginner, it'll get you on the right track and significantly cut your learning curve down. If you've been trading for a while but can't get over the hump, there's stuff in the class that will cause you to think differently. There are nuggets in there that'll help you get over the top. So go check it out. All right, now on to today's video. First, I'll cover the indexes, and then I'll go through a couple of breadth indicators to try and determine what's going on. All right. So here's the S&P 500. I look at this as being very bullish. The chart moves from the bottom left to the top right. I see a rally. I see a consolidation pattern. I see another rally. You can even draw some trend lines in here, kind of like this. So rally up, consolidation, gets squeezed between converging trend lines, breaks out. Now it's trending up above its 21 EMA, which is the orange line. The 50s down below. To me, this is all bullish. Okay, biases to the upside. Dips can happen at any time. Most of the time, the indicators will warn us. But for now, I operate under the belief that the market is strong, it's healthy, it's trending up. Dips are buyable as long as the S&P stays, somewhere up in here. I'm going to operate from from a standpoint that the trend is up. Okay, so maybe we get a pullback here to the 21, and then we bounce. Maybe we get a pullback all the way to the 50, which would be here, and then we get a bounce. Maybe we get a couple months of sideways movement. I don't know. Nobody knows what's going to happen. But as long as we kind of stay up here in this range, I'm going to operate under the belief that the market is trending up, and we want to buy dips, play breakouts, and have a long bias, and not look on the short side. All right, here's the Nasdaq. Similar situation. In fact, it's pretty much identical. Okay, you got a rally up, you got a consolidation pattern, you got the index being squeezed by converging trend lines, you got a breakout, and again, as long as the index can stay somewhere up here, even if we get a pullback, to me that's going to be a pullback within an uptrend, and it's probably going to be bought. And that's, so I'm more interested in if the market pulls back, I'm more interested in just stepping aside and then building a list for the next leg up than I am trying to make money on the short side. Because if I try to play the short side, then what happens is I get married to the short side and I start rooting for it to go down, and then I end up missing the bottom, and then it bounces, and I get I take profits on shorts, but then I miss a really good entries on the next batch of longs. So as long as it stays up here, I'm going to operate under the belief that the market's doing well, and I want to buy dips for an eventual rally back to the highs, and most likely to much higher levels. All right, here is the S&P 400, so it's the mid caps. We got a much bigger consolidation pattern. It's hard to say where the exact top of the pattern is. So I'm going to draw my trend line. Let's do it somewhere around here. Okay, it's approximately right. Those two trend lines enclose most of the data points going back a couple months. Then we get a breakout. We get a little pattern that forms here above the 21, and then we got a breakout, and now it's coming back down. So that's not enough separation from the pattern to confirm the breakout, but nevertheless, we have a bigger pattern that resolves up, and then we get a smaller pattern, and now we got a move up and a move back down. Maybe we get a move down to the 21 right here. Maybe we get a move all the way down to the 50. That'd be fine with me. Okay. If we get some consolidation up here, that'd be perfectly fine. Maybe we pull back and go to new highs. Maybe we pull back and rotate up and down in a range. Not really sure, but I'm still going to operate from the standpoint of we have, the chart moves generally from the bottom left to the top right, and that's an uptrend. So my bias is to the upside, and I'm much more interested in buying dips, playing breakouts, than I am trying to figure out where shorts are. All right, one more index chart. Here's the small caps. I'm using the Russell. I'm using IWM because Stock Charts doesn't do the Russell anymore. Maybe the Russell raised their price. I don't know. All right, so we got rally up, consolidation pattern here. Similar to the mid caps, you got a consolidation pattern here above the 21, then a breakout. Now we're coming back down. Not going to repeat what I've already said. Trend is up. We got to move up. Consolidation, move up. Not a big enough move to confirm the breakout from the big pattern, but decent enough to get it started. Okay, so maybe we get a pullback here. We'll see. But even if we get a pullback, you know, all the way down to the 50, and then we kind of come back up, that'd be fine with me. Okay, these things aren't as smooth as you want. I mean, if you look at candles like this, lots of overlapping candles, the index isn't very smooth. There's tons of overlapping candles, some, you know, lots of long wicks on the candles. If you zoom in with the day-to-day movement, it'll drive you nuts because there's so much unpredictable, just up and down movement, but overall the chart's pretty smooth and graceful and the trend is up. All right, let's look at some indicators now. All right, here is the S&P 500 with the NYSE AD line. So if we look below, okay, you see NYSE line trending up, higher highs, higher lows. There was a teeny tiny divergence right here with the lower high, higher low, but that got negated a week later. So overall, this looks great. Higher highs, higher lows, trending up above a trend line, above the 50-day moving average. If you compare it to, say, last September, October, not this past one, not 2 months ago, but last year, market was making new highs here, and you could see that the AD line was already trending down for more than a month, and it was actually, as it was making new highs over here, it was like literally taking out its 50-day moving average. So obviously there was some weakness telegraphed within the indicator. It's not happening right now. We got a new high last week, which resets the chart. If you need a divergence before a top forms, you know, with a new high, it'll take, you know, that resets the chart, and it'll take a few weeks from here. So this looks great. Okay, there's no other way to say it. If we look at the 10-day moving average here, we do have a divergence forming. Okay, lower high here, higher high here. It's a little bit of a concern. Okay, when the market, you know, it rotated down to 0, which is normal. Okay, and then it started to bounce, which is good, to reassert the uptrend, but then we've immediately lost it today. Okay, so if we get a further move down here, we're probably going to get some move down here, and then the market's going to correct here. Okay, so long term things look good. Short term, because of this divergence plus the indicator is moving below 0, this would tell us that in the very near term we're probably going to have some sort of pullback or correction. I don't know how big. In May we got, you know, a month. In August we got a really stiff 4 or 5 day move, but then it was like consolidation pattern. August was very brief. Okay, we don't know what it will play out. We'll see what happens, but it does look like something is probably going to play out in the near term, so we got to be on the lookout for that. All right, here is Nasdaq with the Nasdaq AD volume line. Okay, very similar situation. We have higher highs, higher lows over here, new high over here. Again, compare it to last year. Okay, as the Nasdaq was matching its previous high here, it was the AD volume line was flat. Okay, which is fine. It could be flat for a while, but it, you know, a little bit of a move down, and this thing like went way below 0. Okay, so it wasn't telegraphed immediately, but as soon as the market moved down, you could tell that there was some weakness there. Obviously, with the new high here, we're well above a trend line support. We're well above moving average, so things are looking good. If this thing needs to diverge before a top forms, before a significant top forms, it's not happening. Zooming in with the 10-day, you got a little bit of a pattern right in the middle. Okay. Not too high, not too low, room to grow to the upside, room to move to the downside. Things are looking fine. Okay, I don't think there's any warning there, you know, no warnings there. Okay, this was a warning here because we had a divergence down to 0. This was a warning here down to 0. We don't have that right now. Okay, it doesn't mean the market can't correct, but it does tell me that if we do get a correction, it's probably going to get bought because internally the market is doing fairly well. Okay, here's S&P 500 versus new highs and new lows. Okay, when the market does well, you get new highs print at a healthy level, and that's exactly what has been happening. Okay, if you look at last September, October, again, market was trending up at its highs, but new highs had already been moving down. In fact, at the time that the market was making new highs here, the new highs at the NYSE had already been rotating down for over an entire month. Okay, that's not happening right here. We have new highs over here, but new highs among individual stocks are clicking in at a pretty healthy level. Also notice that new lows over here, very rapidly moved up. Okay, they clicked up over here, but then they immediately got squashed. So again, short term, it looks like we could have a little bit of a correction here based on the chart that I just showed you with advanced decline line and advanced decline volume line. But as far as new highs, it tells us that internally the market seems to be doing fine, and any dip is probably going to get bought. Okay, a couple more charts. Here is top chart is the Nasdaq 100 charts above the 200-day moving average. Bottom one is the Nasdaq charts above the 200-day moving average. I consider the NAS 100 to be, they're the bigger stocks and higher quality, and the NAS, because there are so many smaller stocks that are low quality, I consider it to be somewhat of a low quality small cap index because there's so many smaller companies. So let's compare them. Last September, I should do a whole video just comparing the current situation to previous tops, just so you can kind of gauge, where we are compared to them. Maybe I'll do that later this week. But so I want to let's look at this. So last year, the market was making new highs at the end of September, beginning of October. So that's approximately right here. Okay, so if I look at this, Nasdaq's above the 200-day moving average have been trending down, but we're still at a good level. Okay, so among the large cap stocks that are high quality, they were doing well. The small cap, on the other hand, or the Nasdaqs, which use so many small caps, so I consider it a small cap index, had already been trending down for a couple months, and then it accelerated a little bit to the downside. Okay, so you can see, right here, the market was making new highs at the beginning of October, and yet the number of Nasdaq stocks at a new high was basically at a low. Okay, so there was definitely a warning there. Okay, but that's not happening right now. Okay, you can see that number of NAS 100 stocks trading comfortably in a range, moving up, trending up, no divergence. It's not, we're not getting something like this. It's just not happening. Same thing with the Nasdaq stocks. Unlike back here where you had a couple months of divergence where it was moving down, where the market was at its high, and yet the number of NAS stocks was already towards a low. It's not happening right now. We got a pretty good print here. Okay, it's a high print. Maybe the market's overbought. Maybe this feeds into the need for a correction, but overall, it tells us that the market's in pretty good shape, and any type of correction that plays out right now is probably going to get bought. Okay, one more chart. S&P 500 versus the percentage of SPX stocks above their 50 and 200-day moving averages. I'll quickly go through this. As far as the bottom pane here, percentage of stocks above their 200 looks good, rolling up and down within a range. We're at the top side of the range. You could argue that maybe there's a divergence forming because, like this rally here meant, I'm looking at the percentage of stocks above their 50, meant that like 80% of stocks were above their 50, but this move is much bigger and it's lasted a lot longer, and yet still only 80% of stocks went above their 50. There were no high prints like up in the 80s. So you can say maybe that's a little bit of a warning, but we're still getting a pretty good print. This is the highest level, going back 2 months. It tells you that beneath the surface there's pretty good participation. Okay, looking at the 200, it's rolling up and down. It's at a high. So same thing. You could argue that, hey, it's too much. The market needs to correct. Shake the tree a little bit. Get rid of some of the weaker stocks. Because when the market moves up, like everything starts to participate, and not everything deserves to participate. So you can argue that we're overbought, but this tells us the market's in good shape and a dip is likely to get bought. So overall, the market looks great. To me, it's strong, it's healthy, it's trending up overall. A pullback seems to be materializing. It can happen anytime, and it seems to be materializing right now. A couple of the indicators hint at that. But I continue to operate under the belief that dips are buyable and higher prices are coming in the future. I'm more interested, if the market dips, I'm more interested in stepping aside and building my list, getting ready to go long, than I am trying to go short. All right, thanks for listening, and go check out my free masterclass at the link below.